Guys, welcome to my channel. My name is Ethel and I'm super excited to have you here. Today we are going to be talking about the Apple stock split. First, we will discuss what this means for current investors. Second, we'll be talking about why Apple even want to do this stock split in the first place. Third, we will discuss about the growth catalyst we've seen in Apple. And finally, I'll be talking about if any new investor should buy into Apple stock due to this stock split. First of all, I'd like to say I am not a financial advisor, so guys, let's get started. If you've not already heard what's going on, Apple has decided to do a stock split because its price soared towards $400 per one share. What this means that if you have one share in Apple, the company will give you 3 extra shares to make it 4. This means you didn't lose in any position in Apple. All that will happen is that the share price is going to go down and you will have 4 times as many shares. Putting it in another way, for instance, at the time of split, if the cost per share is $400, you will get 4 shares worth $100 each. This means you didn't lose your stake in Apple, or you didn't lose the value of your share. So it's still the same as owning one. This brings me to why did Apple even think about doing a stock split in the first place? Now, according to Apple, they did this because they feel like they want their shares to be accessible to investors. Looking at it at the price of $400, it might be over $400 right now. It might be too high for some people to think about investing. So with the price of $100, they feel like more people might be likely to buy into this share as compared to the price of $400. Normally, a stock split is generally opted by the board of directors of the company when they feel that their price has gone high when you compare it with other companies in the same industry. This brings me to the advantages of stock split. Now, the major motive about stock split is to make it more affordable for new investors, even though the value of the company is not undermined. I also feel that any company like Apple, when they do this thing, is a kind of marketing strategy, because as you can see in the news, a lot of news outlets are talking about Apple stock split and creating more awareness about the company's stock. Now let's look at this history of stock splits for Apple. This will be the 5th stock split since Apple went public. So Apple had a common stock split on a 2-for-1 basis on May 15, 1987, June 21, 2000, and February 18, 2005, and on a 7-for-1 basis on June 6, 2014. And now this one that we are talking about. To put this in another perspective, if you bought just one Apple shares when they first went public at $22, you will own 56 shares. With the current price of $433, the price of your shares will be over $24,000. I mean, this is an impressive growth. Now let's look about more information about the split. Now, the record date for the split is August 24th, 2020. This date determines shareholders who are entitled to the additional shares due to the split. Now, the split date is on August 28, 2020. Shareholders are due for the split. This means that if you wake up the next day, maybe 29th of August 2020, the number of shares you have must have increased based on what you have initially. X date is August 2020. This is a new date when Apple common shares will trade at a new split adjusted price. Now let's talk a little about stock buybacks. A stock buyback, also known as a share repurchase, occurs when a company buys a share from the marketplace with accumulated cash. A stock buyback is a way for a company to reinvest in itself. Repurchased shares are absorbed by the company and the number of outstanding shares on the market is reduced. Apple has a history of buying back its shares. Let's take a look at what they have done since they went public. Now, since kicking off its repurchase program in 2013, Apple has spent over $327 billion to buy back 2.5 billion shares at an average price of $131 per share. Can you see that? Last year alone, Apple spent $55 billion buying back 283 million shares at an average price of $194 open market transaction. Adding this total to $12 billion of accelerated share repurchase, Apple spent a total of $67 billion on share buybacks. Now, the board of directors has approved 7 consecutive increase to Apple's share buyback program since the program launched In 2012, 10 billion buyback authorization. In 2013, 60 billion, which is an increase of 50 billion from the initial year. In 2014, 90 billion, which is an increase of 30 billion. In 2015, we have a 140 billion, which is an increase in 50 billion. In 2016, we have a 175 billion, which is an increase of 35 billion. And in 2017, we can see here, we have a 10 billion increase, which we have in 2017, they did a 210 billion increase of 350, increase of 35 billion. In 2018, we can see a 310 billion, which is increase of 100 million. As you can see, Apple buys back a lot of their shares, and that is good for investors and for the company. It's good for investors because it improves the shareholder value, it creates tax benefit opportunities, and it increases share price. For the company, it allows them to repurchase and invest in themselves by reducing the number of outstanding shares in the market, hence increasing the value of the stock for investors. This is what most investors would like to see. Now, cutting the long story short, Apple has actually grown since they went public. Let's take a look at the growth catalyst that Apple has experienced since going public. Now, when we take a look at the top shareholders, we can see that 62.2% of the share is held by institutions, which is very interesting and encouraging for long-term investors like me. I love to see things like that because I believe that institutions know more than people like me. For example, Warren Buffett's stake in Apple has tripled in value to be worth over 100 billion, as reported by Business Insider. He spent 350 billion to acquire 250 million Apple shares between 2016 and 2018. According to his 2019 shareholders letter, Buffett has since sold some of his Apple holdings and at last count owned 250 million shares worth more than 104 billion. Let's take a look at their earnings report. From quarter to quarter, the EPS has gone up from its initial estimate. Apple has smashed its estimate earnings from quarter to quarter. As we can see, the estimate for the next quarter has gone up massively. As of August, here we can see that the analysts have majorly recommended buy and strong buy. As you can see right here, not underperform or sell, but we can see 6 recommendations for hold. So a lot of analysts are saying you can buy this stock now. We can see that the revenues are up by 11% and earnings per share is up by 18% to a new June quarter records. Company posted quarterly revenue of 59.7 billion, an increase of 11% from the year ago quarter, and a quarter earnings per diluted shares of 2.5, which means it's up by 18%. As you can see, net sales went up across board. International sales accounted for 60% of the quarter revenue. So let's take a look at the service revenue. You can see that the service revenue increased by 15% over year in the fiscal third quarter, and its gross profit accounted for 39% of the company's total gross profit. By the way, Apple services include things like iTunes, Apple Store, the Mac Store, Apple Music, Apple Pay, Apple Care, Apple News, and etc. Now, if we look at the year after year quarter result, Apple services has gone up by 15%. Now, another growth catalyst that we might consider is this stay at home that we all are experiencing. Like, people are majorly working from home, and this entails buying more Apple products. On top of that, Apple has acquired Canada's MobiWave for about 100 million. MobiWave's technology lets shoppers tap their credit cards on a smartphone and another phone to process a payment. So Apple is currently living up to the current situation that we are in right now. Now let's talk about if it is good for all of us to jump in and buy Apple stock due to this stock spill. Well, for me, I would say no. But however, if you're going to buy any stock as an investor, you should be ready to do research on the company. Take a look at their balance sheet. Take a look at how they stand in tough time. Take a look at their growth catalyst what does this company stand for, and also you should love the company you are buying. Also remember that any investment can be a risk. Things might not go well as you talk, even as everybody is talking on YouTube, how the analysts are talking. Even the corporate investors can also make mistakes. So with any investment, have it at the back of your mind that it is a risk. If it goes well, fine. If it doesn't go well, okay, fine. And finally, to get the most out of your investment, patience is key. I hope you guys enjoyed this video. If you did, please don't forget to give this video a huge thumbs up, share it with your friends or family. See you guys in my next video. Bye bye.